All right, guys, welcome back for another video. In today's video, I just want to do a broad overview of the Bitcoin market and talk about some of the ideas I've touched on in previous videos and sort of aggregate them into one broad overview. Right now, I'm looking at the Bitcoin USD chart on the weekly. I would describe the recent few weeks of Bitcoin as capitulation behavior. Notably, we have 8 weeks of down candles on Bitcoin, which is actually a record. Bitcoin has never put in this sustained of down candles on a weekly time frame, so that's significant. And I would describe it as a capitulation event. I know a lot of people, may think we haven't seen the capitulation event yet, and that the capitulation is going to be coming in the next few weeks or so. And maybe they're looking at the volume. They may be seeing this volume here and saying, well, yeah, it is significant volume, right? But it's less relative to this one here. I actually want to draw your attention to this chart right here. This chart right here is the essentially what this is the stablecoin aggregate volume, and it's stablecoin to USD. So essentially, what you're seeing here is the US dollar stablecoin pairs aggregated, so that that would be UST, you know, Tether, USDC, everything aggregated together, trading against the dollar, and you see that is major spiking. And what this really represents is capital outflow, right? Like real capitulation, um, capital outflow in the market. Um, especially entities with significant stablecoin reserves. So, I see this and I see this as, here's a capitulation signal right here. This is not confirmation of anything except for capitulation. Anytime you see that huge V-shaped volume spike um, after a breach of liquidity on the lows, that's your signal right there, essentially. Now, of course, capitulation is only one of those things that you identify in hindsight. And when you're in the middle of it, it doesn't necessarily feel like it's over. And there is no guarantee that it's over. But we can look at the conditions of the market and identify that, the conditions you would expect to see during that period are present and are showing themselves. I mean, you see here the fear and greed index is pretty lines up with what you would expect in that environment. Of course, it's been at that level for a while, so how much stock you put into that is kind of I also want to identify this as what I believe to be a black swan event. Everybody right now is getting caught up in what's happening in the macro and the macro environment with interest rates, and they're losing sight of the fact that essentially what happened here is the Luna Foundation guard blow up. And now people may not think that's significant just because Luna is just an altcoin. How does an altcoin have significance over the Bitcoin market? Well, the Luna Foundation did have 80,000 Bitcoin in reserves. I mean, that's essentially in the same ballpark as the size of Michael Saylor. Imagine if Michael Saylor market sold all his Bitcoin at once. And that's what even made it more of a black swan event, is because all those Bitcoins hit the market at the same time, trying to defend the peg on their stablecoin. So that's really the most, in my experience, or to my knowledge, the most Bitcoin that's ever been, dumped on the market at one time. So I think, and it's relatively unexpected too. I don't think anybody was calling that. So in my mind, that does, it's a significant size enough to represent a black swan event. And that's why you do see, things that we haven't really seen in Bitcoin before, like setting records of 8 sustained weekly down candles, things like that, and then your capitulation signals following that kind of lines up like what we saw in the stablecoin chart. Uh, you know, the interest rates, I think people are using interest rates to, you know, uh, kind of explain this move right here. But if we just return to this chart here, this chart demonstrates the federal funds rate rising with Bitcoin's price action. And again, it cuts off here recently, but the point I want to draw your attention to is this area here. You can see here that the federal funds rate, rising from zero. Bitcoin enters a bull market as that's happening. It's clearly not a. I just don't know that there's a relationship there that people think is there. Naturally, whenever price goes down, people want to understand the reason why it went down. And but the reason that they naturally latch onto may not actually be accurate, right? It may just be the best fitting narrative that is within their reach, but doesn't necessarily capture the full picture. So I don't know. Looking at this chart, I just don't know that. I mean, you see here, right? I mean, if you had entered, if you had said, okay, interest rates are rising from zero, I'm going to enter a bear market model and short as interest rates rise. I mean, you would have think the market would have gone parabolic on you. You would have got blown up. So very obviously not a one-to-one fit there. Maybe there's some correlation. I think what there is a stronger correlation to, if we go to the here we have the correlation between Bitcoin and tech sector index. I think people focus on the S&P 500 in Bitcoin, and I think that's a little bit of a mistake, right? Bitcoin is more closely correlated to Nasdaq than the S&P 500. People may think, well, that are you splitting hairs? Well, the Nasdaq represents the tech index, and so some investors see Bitcoin as the tail risk to the tech index. So it's naturally that that they would have that built into their models. And also another important nuance here is that when Bitcoin is going to the downside, and when the markets in general are going to the downside, that's when you're going to see the strongest correlation between the Bitcoin and tech sector equities. And that's because it represents disruptions in the credit markets, right? So you see clearly, both assets are tied to the credit markets. You see disruption in the credit markets, causing assets to decline, and then those assets are going to decline in tandem. So the correlation, it's not going to hold up during up moves. So I think that's important to recognize. And also another key nuance there is that, Bitcoin is probably going to bottom out before the Nasdaq bottoms out. So you may see a situation where Nasdaq is still falling, but Bitcoin is holding support, and that's a key thing there. Now, as far as which one leads to the upside, that's a little up in the air, but just a few things to keep an eye on. Another thing I want to point out is the Bitcoin total supply last active 1 year ago. I had mentioned this previously in multiple videos. It was really one of the foundational things for creating a bullish bias. Also, in line with some of the videos I did on the Bitcoin stock to flow deflection model. If you haven't seen those videos, go check those out. Because right now, actually, the Bitcoin stock to flow deflection model is printing the lowest read it's printed in, I believe, a decade, several years. And at the meantime, you see Bitcoin supply breaching all-time high. So I think it was at 64% before the recent move down below the summer 2020 lows. And now we're seeing it push up above 65%. So it's during the last few weeks of price action, right? When we go back to the price chart, we're talking about this, these record down weeks. During that period of time, the illiquid supply has steadily increased and pushed from 64 to 65%. So the real underlying scenario that could lead to a short squeeze or a supply shock has only gotten greater as prices declined. So that's something to keep an eye out. It's still something that is lending itself to me having a bullish bias because I'm looking at the underlying fundamentals of the market. And this signs of capitulation that are present, and operating off that. Now, of course, just going back and moderating this whole idea, right? I mean, there's no there's no reason why Bitcoin can't go lower, right? But this is the time of the market where guys in suits will come out on the media and say Bitcoin can go to 8,000, right? You get the head of Guggenheim Partners calling for 8,000 Bitcoin. I mean, you have to understand that the message is more right. You have to understand where the sentiment of the market is, and that those guys come out at these phases in the market to make those announcements. Well, because they'll get more impressions, and it's tempting to think that that you can read into that and get some type of insight out of that, because if somebody manages this massive fund, they must have some type of insight that I don't have necessarily. And while that, on a surface level, that makes sense, there's a couple things wrong with that, right? Like, on one level, they could be wrong, right? They could be making an honest prediction and just be wrong. But I think what's more common and more nefarious is that people getting out publicly making those big statements are making statements that are directly contrary to what their portfolio is or the trades that they're actually taking. Again, there's no guarantee that that's happening, but that does happen in markets, and it's very common. It's happened for decades, and it's going to continue to happen as long as liquidity is an object for these guys of these size. Anyway, just revisiting the trade idea I covered in a trading journal the other day. I was looking at this. I'm looking at the macro with this kind of liquidity mindset, institutional order flow mindset. So looking at, you got, maybe even mark these off. Let's see. So you have this liquidity run right here, right above these highs. Price grabs liquidity right there. And we get the same type of phenomena down here, marked with your high volume. So you get, right, price came here, and then so you have this, what is objectively a weekly lower high, right? There's a lower high in the weekly. And, this is where a lot of people got bearish, right? Because objectively, you do have a lower high confirmed on the weekly, right? You have this candle right here. Price takes out the low here, closes below it, takes out this low here, closes below that low. So for all objective purposes, people were looking at this as a lower high on the weekly. And while it was, you see one aggressive push up above liquidity. Liquidity gets ran, and then you get liquidity ran below here. So you have the same type of phenomena. I'm looking at this and seeing institutional involvement. Of course, the guys in suits are going to come out here and tell you that Bitcoin is going to, $8,000 or $10,000, because they're trying to use their media connections to generate liquidity in the market. So, again, no guarantees in the market, but it's just something to watch out for, something to keep in mind. Again, we don't have the reversal that we did in this liquidity video here, right? Remember, if you caught that video, you remember that on the first run up in October, Bitcoin didn't confirm the reversal till October 13th, or excuse me, November 18th. So it took a month. We're really not there yet here. We need to close above these levels right here to confirm that. Really this level here. So that pattern is not in the market, but you do see this V-shape move down below the liquidity, and you see the volume signature there, and then you see this sideways pattern, right? Of course, for some reason, it's the sideways moves in the market that tend to catch people off guard, and well, not catch them off guard, but tend to drive people crazy. Really, I don't know why that is, but it just seems like that when the market moves sideways, people tend to lose their mind a little bit. Now, people may be saying, well, look, man, the trend is so strong here, right? Do you really want to fade a strong trend like that? Well, the thing is, the I think the problem with trend trading, right, or the right the phrase goes, the trend is your friend until the end of the trend, right? The ending of that is very important, um, because people think that the longer a trend continues, the more it strengthens, and really, especially in an environment like this, right? It's just not true, right? You have, if you see a trend, right? If you go down to a daily chart, you see a daily trend, right? You may be looking at this and thinking, at this phase in the market, you're thinking, well, this is such a powerful trend. Are you really going to fade the trend? Well, not until it breaks, right? But the other element to that is that, if as price goes lower, you get more bearish, right? Then you lose the big picture, right? Which is that Bitcoin just on the macro goes up. So you could wind in a situation where as price continues to go lower, if it goes lower, you get in a situation where you get more and more bearish until your bearishness peaks at whatever the bottom is, right? And that's kind of contrary to the realities that exist in the market, right? You want to catch the top. You want your bearishness to peak at the top, right? Right here, like this area here, this distribution pattern here. Obviously, we all know this, but you want your bearishness to peak at the top and then fade away, right, over time, right? And then kind of, maybe you're accumulating spot, but your bearishness is peaking up here, fading as liquidity gets ran below the macro lows. Anyway, I hope you guys like this video. If you guys like this type of content, just make sure to like the video, subscribe to the channel, and catch you guys in the